Okay, good morning, folks. Welcome to Market Wrap from yesterday. I'm recording this on my laptop microphone, so my apologies if the audio is not too good. Let's begin with the pre-market price action. Yesterday, the markets pretty much did what we expected them to do. They rallied and then they faded. This is my first view of the market, with the exception of a view of the CNBC app earlier, so I'm just trying to digest it. So we have the NASDAQ 100, or the Qs, above here, in essence, flat on the session. We have the 10-year yield firmly above, on a closing basis, above 3%. Dollar, oddly enough, or not so oddly enough, we knew it was overbought relative to the third standard deviation Bollinger Band. We'll go to the closing daily chart in a moment, which is kind of weak, but it was weaker. It's rallied back some. The VIX, not much happening here. 30-minute chart. Well, there is something happening here in that we broke out and now we're consolidating gains. So we may get more upside here on the VIX. Now, as we take a look at gold is down somewhat this morning, but it is flashing a bullish reversal bar. This is only a 15-minute chart though. Let's not read too much into it. A good day yesterday for the gold mining stocks. We did see a fade on those names. Let's go to the closing price action yesterday. And we want to kick it off with the yield curve monthly chart. And on a monthly time frame, the yield curve looks ominous in that we have rallied off the lows of the month. We are down only slightly, 2 bips. Oddly enough, 2 basis points is still nearly 10% of a move. Let's take a look at a weekly chart, see what we're doing this week so far. And we have new weekly higher highs. Now, we always look for a pullback and a higher low to form a base. I'm not a big believer of V-shaped recoveries. You do see them on indexes after a big sell-off, like we saw post-COVID, but most of the time you get that higher low and they break out to new higher highs. So we're not there yet. We're forming that base, so no reason to go freaking out yet, but it's certainly a warning flag on the track that we have a steepening of the yield curve. The 10-year yield, what can I say? It's firmly above 3%, above resistance, now support. The TLT, that bear flag setup on a weekly time frame that we saw a few weeks ago, now is firmly in the rearview mirror. We don't know whether or not we're going to put in a higher low here. Right now, the path of least resistance remains to the downside, and bonds remain in a bear market. Daily view, bearish reversal bar or hammer formation yesterday. Volume rose to the downside. Stocks are oversold, so we may get a rally here, but first I think we get more downside, and then perhaps a bullish reversal bar, setting the stage for a pullback on yields. But I think that pullback is going to be temporary. The dollar, weekly view, new weekly higher highs. We're still up on the week, but we have faded. Volume so far this week is still incredibly high. We only have 2 days in the books, yet volume is above last week's of volume. So that tells me that yesterday's volume must have been insane. Yeah, this is huge. So clearly distribution on the US dollar yesterday. But you know, if you take a look at it, you have all of this price action, over 14 million shares traded, and you were only down less than a half percentage point. That tells me that there's still a lot of bids under there. They were bidding the dollar up higher. A lot of indecision up here, but we've come a long way. So it's going to be interesting to see how this plays out. But we are still extended relative to the Bollinger Bands. I think that we still get a pullback here on the dollar, allowing for precious metals to continue their run up higher. But if we break out above the highs of July, that's going to spell trouble for precious metals, absent geopolitical risk. The VIX, a gap up higher on the week, daily view. Yesterday, a huge tug of war. Ultimately, the bears won out in that we have closed above a support level. Now, one thing I do want to point out is for those folks trading the VIX products out there, this is why I stopped trading them a long time ago. This is the VXX. Now, note the price action here, 3 consecutive up days. Yeah, look at the VXX. This is a broken product. So I would strongly encourage people to avoid these products like the plague. The Dow Transports, daily chart, an inside day, an up day yesterday, they shrugged off some of the volatility. Volume was light. Stokes are declining. They will be down below the 50 mark today. You already have the fast line there, so we know that rallies tend to fade. So just be careful about chasing any rallies if we get one. S&P 500 daily view, a reversal day yesterday, light volume. We're nearing support right at around that 41.14 mark. Where do we close? 41.28. So we're not that far away. TripQ's weekly chart, of which we are short. At current on the week, we have a breakout point failure, meaning we had broken out 3 weeks ago, and now we are threatening. Week is not over yet. We have 3 trading days left to go. We are threatening a breakdown on the VIX. On the Qs. Daily view. Stokes are weak, and they're probably going to get weaker. Volume was light yesterday, and we can't seem to close above that 315 mark. So we're going to have to pull back further and then get a running start on that 315 mark if we're ever going to recapture it. So I'm still contemplating booking some profits here on that Q short. I'm in no real rush, to be honest with you. We have the steepening of the yield curve. We have yields above the 3% mark. You know, what seems to be the rush here? Absent the fact that we do have weekly and monthly support levels below, which is, as a technician, has me wanting to pull the trigger and making those profits real, but that leaves us without a hedge. So I'm torn. Maybe we'll take a portion of it off. The banks, this is the FAS leveraged ETF, broke weekly support. Very similar to the chart as to the XLF. Bearish Q reversal bar yesterday. Consumer discretionaries, new weekly lower lows. Volume very light. Daily view, holding support, but these Stokes are weak, down below the 50 mark. For new members, I have a saying, you hear me repeat it over and over again. I do so for a reason, because I want people to remember, when you have your stochastics trading down below the 50 mark and declining, rallies tend to fade. So please do not go chasing rallies early on in the day. If it's weekly Stokes that are trading down below 50, don't go chasing rallies early in the week. You want to see them flatten out and then hook up. Staples, holding weekly support. I don't know why I have all these weekly charts up here, but oh well, doesn't hurt. I'm working off my laptop, so I don't have as many saved charts. Daily view, we reversed off the 20-period moving average yesterday. Stokes is still weakening up here. I don't see anything compelling to go reason to buy the staples. Technology. As with the Qs, a breakdown below weekly support. Unlike the Qs, we don't have a breakdown back into the prior trading range. So similarities are there, but the XLK is less worse in terms of technicals. The semiconductor sector, which was looking good a couple of weeks ago, no follow through, in fact a breakdown. This is very, very bearish. We're just holding on to a breakout point by a very thin thread on a weekly time frame. Daily chart, an inside bar yesterday, resistance at 230 now. Volume to the upside, very, very light. Energy, a very strong day yesterday, up nearly 3.5% at resistance. You can see that the correlation between energy stocks and oil is beginning to flatten out and hook up. So what that leads me to believe, volume is light. What that leads me to believe is that oil is catching a bid, and it is. It is up $3.30 or 3.5% on the week. This is negative for equities. And the reason that it is that, remember, I want to always harken back to this, because we're looking, or we're projecting about what the September CPI is going to look like in October. And if the decline in oil prices and in natural gas prices in June and July helped to bring down the CPI month over month, well, what's going to happen when it shoots back up in September? So we need to project out that these numbers are going to hit CPI, PCE, whatever inflation index you want to take a look at, and it's not going to be pretty for equities. Emerging markets, holding weekly support. Nothing really to do here, I don't think. Nah. Not much happening here. Bitcoin. We broke down. This is a weekly chart. We broke down last week. This is a retest of a breakout point. I think that this fails and we go lower on Bitcoin. I would not buy this dip. Daily view. Yeah, we're rolling over on Stokes. You're seeing a consolidation here. I think ultimately this gets resolved downward. LABU eked out a gain yesterday. We closed back above 10. Yeah, we did. LABU firming up here a little bit. Daily view, not bad. Stokes are nearing oversold, but still declining. I would give this another day or so, see how this behaves. Maybe we'll sell some puts. Gold. At current, flirting with a recapture of at 1760 mark. I don't want to get too giddy, but we have 3 trading days left to go. A lot can happen here, but the weekly chart is looking okay. We're down fractionally. Daily view. RSI, hockey stick up. Stokes hooking up. Good day yesterday. Big outside reversal bar. Not quite. Let me rephrase that. It's not an outside reversal bar. We did not take out the lows of the prior day. So not an outside reversal bar, but a reversal bar nonetheless. We recaptured support. I can say that this is a second retest of a breakout point confidently. So gold is definitely firming up here very nicely. Moving on to the gold stocks. GDXJ first up. An attempted recapture of 32. We failed. The RSI Stokes looks similar to gold. Volume was good, but you still have a lot of overhead supply here. Taking a look at Nugget. First on a weekly time frame, potential higher low. Let's memorialize this. There's our triangle formation. We don't need to do anything right now, right? We have covered calls above. We have naked puts below. I'm in no rush to either roll or to do anything as we're in a tightening triangle formation. Now, do I want to accept more put options? No. If they drop down below the 950 mark, which is where our, the 2950 mark, where our strike is, I'll probably roll those again. The calls, we're very close to a breakout here. I may go out further in time and further out in strike to get away from that 30-50 mark if by chance we close down below it. But again, I'm in no great rush here to close out those put positions or the call positions at current. And frankly, if on Friday afternoon we're flirting with 30-50 and we close just above 30-50, I'll let them call them away and I'll just sell puts. So that way we're just continuing to generate cash flow. And we'll sell puts really, really tight. If they call us away at 30-50, we'll sell the 30-50s, meaning the puts. So an attempted breakout. I think we did break out yesterday, so we're close enough. We're just above resistance here. You did see topping action. So this goes back to why I'm in no great rush to exit the option positions that we have on here. And we'll just sit tight, let the time decay work for us, and we'll take action when necessary. Gold money down 1% yesterday. This is a very tight chart. This is going to want to unleash. I think as soon as gold starts rallying, gold money is going to start rallying as well. AGQ weekly chart. An up week so far, fractionally, daily view. An up day yesterday, a bit of a fade on the session. The silver miners up over 2% on the week, looking really good here. Nice higher low. They're looking better than the mining stocks, daily view. The gold mining stocks. Strong day yesterday, up nearly 4% on the session. We'll take it. Uranium, beautiful, beautiful retest of a breakout point on a weekly time frame. If we close like this, I'd be okay with adding more to uranium. We had broken out a few weeks ago, and this is why it pays to wait for the retest. Let's see how we close here. The daily chart, we have a lot of overhead supply, no rush. Let's wait till Friday, see how we close it out. Now, Boyle had a real serious pullback yesterday, and I was rather surprised to see it. I thought it was going to move up higher. So before I take a look at the daily charts and the weekly charts, I want to see if the reason as to why we're so bullish on Boyle on that monthly time frame is still intact. And yeah, it is. This is a pretty strong setup here. Granted, we have a bit of a fade. The 50-period moving average is 108.33. Where are we at? We're just below that. And we're okay with that because we have the naked puts below, far below, and we have the naked calls measurably above, now significantly above where we closed out yesterday. So a lot of volatility premium came out of those calls yesterday. So it offset any of the losses on the common shares because we have so many more contracts than we do common shares. And the options are very overvalued to the upside. Well, I shouldn't say overvalued because we don't know if they're overvalued. They're more expensive. You have more call skew value than you have more put value. So we didn't lose as much on the put side because they're not being bet up. And the call side lost a lot of their value. Those could easily reinflate if we see a bid on natural gas prices. So I'm in no rush to roll down those call options at all. We want to give natural gas a lot of room to run here. Daily view, big outside reversal bar, and I kind of like it. It gives us breathing room. I was worried about a spike up to 150, 160, where we would have to take very, very aggressive action, which I didn't really want to have to take. And that action would look like either A, buying in the money call contracts to hedge to ensure that we didn't see a breakout above 150, 160, threatening our naked call position, because the premium that should offset the inflation of the call options just wasn't coming out of the puts. They're very, very unbalanced. I've never seen it before like this. So it's not really a great instrument to trade strangles on. Whether it's any better on the UNG, I'm not sure. That's something I have to look into. I don't know if it's just the instrument or it's the sentiment of the natural gas product. So maybe we'll look into that. And the failure of the puts to provide us more of a hedge caused us to have to put on some common stock. Now, one position that we were in and we're out of now, and I was looking for an opportunity to get into yet again, is Cal-Maine Foods, which on a weekly basis is down over 5.25%. I have not looked to see whether or not there's news here. I was surprised to see this yesterday, daily view, a serious sell-off, which is good for us. We'll do a little bit of research here and see if there's anything to be concerned about or whether or not this is an opportunity. But as it stands right now, looks like we have, if you go back to a weekly chart, a double top. So I would not go running back into Cal-Maine Foods right now. And with that, folks, everybody have an awesome day. Again, there won't be a 3:45 p.m. Closing call, and I'll probably get market wrap out tomorrow morning. Till then, everybody have a profitable day, and I'll talk to you soon. Be well.